Let's talk about adjusting entries. An adjusting entry is basically required at the end of the year to bring account balances up to date so that we can properly prepare financial statements. I feel the best way to understand adjusting entry is first look at an example so we understand why we need adjustments to start with. So, in this example, we've got APC Pest Control Company had supplies costing $2,300 in its supplies account on January 1st, 2022. So basically they brought those supplies forward from a prior year. On June 1st, the company purchased an additional $3,600 of supplies and recorded them in the supplies account. No entries were made as the supplies were used during the year. Which that makes sense. Think about it. If you go to a supply closet and grab a pencil, do you want someone having to track every single pencil every single day that comes in and out of the supply closet? Absolutely not. That's not time conducive. It would cost a lot of money to have someone just sit there and monitor supplies all day long. So what we do then is at the end of the period, we'll go in and count and see what we have. So at December 31st, a physical count revealed that supplies on hand were $1,540. So first off, let's find out where we began. Our company began the year with a balance of $2,300 in supplies. So our ledger would start the year like this. So think about it, $2,300, what type of account is supplies? What's an asset account? So if we're going to have $2,300, that would be $2,300 in the debit side of the account. So remember, in a T account on the ledger, the debit means left, credit means right. Then on June 1st, the company purchases $3,600 more in supplies. What did the company record then? Well, when the company records supplies, they're going to debit the supplies account, and they're going to debit the supplies for $36. So we're going to carry this as an asset because we do not know how much of that supply or how many of the supplies we purchased will be used this year to generate revenue. So we're going to put it in a supply account, and then over time we will expense those. And then it doesn't really say how we purchased them on a cash or account, so we're going to assume that we paid cash for them. All right. So now let's post that to the supply account. Well, we debited the supplies for $3,600 more here. So let's go in and do a debit. Again, debits are on the left, so we'll put 36. So what does that bring our total balance to? Well, notice, if we were to add those two together, we take $2,300 plus the 36. We get a total balance of $5,900 in the account. Okay? But when we did that, what did the year ended say? Well, it said when we did our physical count on December 31st, we only have $1,540 on hand. Well, what does that tell me? Well, that tells me I should not have $5,900 in this account. I should only have $1,540 in that account. Should we report 59 on our balance sheet then, when we physically only have 1,540? Absolutely not. Well, what happened to those other supplies? Well, obviously we used them during this accounting period to help us in the operation of our business. In other words, to generate revenues. So on December 31st, we need an adjusting entry to book the use of the supplies. That way we can properly report. So again, let's look at this. We had 59. So if we started with 5,900 and it said on hand we had 1,540, so let's subtract out the 1,540. So what that's going to tell us is how many supplies, or how much, I guess is a better way to say that, how much in supplies we actually use that period. So go in and take your $5,900 and then subtract out 1,540. Take just a moment to do that. And you should come up with 4,360. That's the amount of supplies used. So what that means is we need to bring that supply account down. Well, what does that mean? Well, again, and I'll do it on paper, it's a little easier. If we have our supplies account here, and notice here we had 5,900. That was the sum of the two, the 23 and the 36 there. We need to bring that balance down to 1,540. That's where we need to end the accounting period at. So if that's the case, how much do I need to record? Well, I need to reduce the account by 4,360. We're looking at an asset account here. How do we reduce the asset account? Well, to reduce an asset, we need to credit the account. So we're going to go in and credit the account for $4,360. All right, so let's go in and do that. We need to credit the supply account. So let's go here. Remember, debits first, followed by credits. That's just my preferred good journal form. So we're going to go in and we know we need to credit the supplies account. How much? Well, we said $4,360. Well, what do we debit? Well, as we consume supplies, they become expenses to us. So we're going to go in and we're going to debit our supplies expense account for $4,360. All right. Now that's one common example, but notice why we need adjusting entries. We need to be able to update these account balances so that they properly reflect the true balance as of year end. So before we look at other types of adjusting entries, there's two categories of adjusting entries and 3 rules we need to discuss. First are deferrals. Basically what a deferral is it means we put off the recognition of. Supplies is an example of this. When we record supplies as assets, we put off the recognition of the expense until we actually use the supply. Because again, remember, revenue recognition states we recognize revenues in the period in which they are earned or the obligation is complete. We recognize expenses in the period they help us generate revenue. So if you buy $3,000 in supplies, you only need to expense the portion of those supplies this year that helped you to generate revenues, and then put off the recognition of the remainder. So basically we're putting off the recognition of the $1,540, what we had on hand, until next period when we use them to generate revenues. Then we have accruals. Accruals simply means it accrues over time. Things that accrue over time. Interest, for example. So every day that passes, if you have a loan, interest accrues on the loan. So that's an example of accrual. Same way with salaries. I don't get paid for every moment I work. I work a while, my salaries accrue, and then they pay me at some set point in time in the future. So salaries are an example of accruals. Another example of an accrual would be like your power bill. Every day that you're operating, you're generating or using electricity, which is increasing your power bill. But again, you don't get charged for that until the end of the period. So those accrue over time. So those are some examples of accruals. Now, what are the 3 rules? Well, first and foremost, rule number 1 here. We never, ever, ever want to use cash. So if we go in here, we do not want to use cash. Never, ever, ever use the cash account. Cash would signify an actual external transaction, a transaction where you're going in and actually paying it. Well, adjusting entries aren't doing that. We're adjusting account balances, so you're never, ever, ever going to use cash. Now, the next thing we need to remember is that we need to have one asset. So you're going to go in and you're going to hit one asset account, or you're going to have one liability account. Okay? So those are the 2 options there. You're either going to have an asset or a liability. You must use one and only one. So in other words, you're bringing an asset either up or down to its final balance for the year. Same thing with the liability. You're either increasing or decreasing the liability for the year. And then the last thing we must remember is you must have one revenue or you must have one expense. Okay. Now again, you're not going to have both. You're going to have one or the other, but you must hit one revenue account or you must hit one expense account for that adjusting entry. All right. Now, let's talk about some examples in the next video. So what we're going to do is we're going to pause here now that we've talked about one. We'll come back in the second video and just review some additional common adjusting entries that we will have in the company.